Welcome to Admiral Navigator, the podcast that turns ERP complexity, AI potential, and operational risk into your competitive advantage by sharing the wins, the missteps, and the lessons that drive scalable growth. I'm your host, Dominick Zappia. Each month I sit down with mid-market leaders who face the same challenges you do and chart exactly how they move from uncertainty to measurable growth. This is your map from challenge to outcome. So let's navigate. Does your organization use Microsoft Dynamics 365 Business Central or another ERP system, and you're responsible for managing and reporting sales tax on the products you sell or the services you provide? Or maybe you're in wholesale or manufacturing, and your bigger concern is managing exemption certificates and not sales tax. Or perhaps you're facing use tax liabilities during year-end close and need a streamlined way to stay compliant without manual workarounds. If any of this sounds familiar, tune in to hear how Avalara integrates seamlessly with your ERP to automate tax compliance and help you avoid audit risk and penalties. Steve, John, thanks for coming on today. I appreciate it. I see you wear your team colors. Appreciate that. Before we get started with all my questions, maybe we get a little bit of information on you, Steve, and then John, a little bit about yourself and what your roles are at Avalara.
Yeah, absolutely. Well, thanks for having us today. And we really appreciate being here. But I'm Stephen Park. I'm the sales executive for Avalara in partnership with Admiral. I deal really exclusively with clients that are in the Microsoft space for accounting systems. And so been with Avalara for some time. I have some dangerous knowledge about sales and use tax, but I would be your customer facing resource when it comes to Avalara.
Very good. Yeah.
Awesome. Yes, we do like to show out here with the Avalara orange. That way anyone can pick us out of a crowd and know exactly where we're at. But again, thanks for having us here, Dom. My name is Jon Csaszar. I've been with Avalara a little bit over 3.5 years now. I actually directly sold in what Steven's position is, but now I just manage the partnerships, right? So, Dom, that's why I talk to you monthly here and, again, try to help each other and help your customers out.
Great. That's fantastic. So today we're going to talk about sales tax and other issues around sales tax compliance and things of that nature. So, John, tell me a little bit why a lot of people think sales tax is so convoluted and confusing.
Yeah, Dom, again, thanks for having us here. We're happy to be here. Really, sales tax gets so complex because it's left up to the states, right? So every state has their own rules and regulations, taxability laws, regarding sales and use tax. And really that opens up to every state doing their own thing, right? A lot of states are try to keep things simple, with just a straight sales tax rate on specific products. Other states such as Colorado, right, it complicates it by having state, county, city, and sometimes even local township, right? So sort of taxes. So really just leaving that up to the states really allows them to do their own thing, which unfortunately makes it complicated for businesses to be selling across the country.
Right. So if I'm in Manhattan, in downtown, and I'm in Manhattan uptown, the sales tax could literally be different typically?
It could vary, absolutely. So again, just going back to Colorado, I always like to throw out, I could purchase a computer and at one price and one sales tax rate. My neighbor across the street could get a completely different sales tax rate for the same exact product that we're purchasing. So it's almost looks like a gerrymandered map sometimes when you look at these sales tax jurisdictions, and it's kind of on purpose again to kind of make it very complicated for businesses.
Yeah. So Steve, what are some of the challenges that businesses have with sales tax? Whether it's manually calculating it or what are some of those things?
Yeah, I think it's in general just understanding what's happening with the sales tax rate, right? And so, like John said, all of these states have their own tax codes, they have their own laws, they have their own rates. And so it depends on what you're selling, how you're selling it, and who you're selling it to. And I think businesses in general have a hard time grasping those concepts for every single state that they're selling into. And so as a business starts to grow and become more complex, as they start to go into more states, that's really where we see a lot of confusion. It's okay for businesses that are doing business in a single state. I think they can grasp what's happening in the state that they operate in. But as they start to grow, they're having to take on a lot of language and tax code that they might not be used to in those different states.
Right. So if some clients don't have the need to collect sales tax, it's just not an issue because maybe they're, a distributor or manufacturer. So what are some of the issues or compliances that they need to keep track of?
Yeah, absolutely. So I get this question a lot because most of the clients and prospects that I sell to are dealing with either one, they're exempt themselves or they're selling to a lot of exempt customers. And so sometimes they feel like there's not a lot of financial or audit risk there. But I would have to debunk that myth because the state and these counties and these local jurisdictions, they always want their revenue. So they're going to find a way to get use tax or sales tax out of a business one way or the other. And I think there's a lot of confusion here because whether or not you're exempt, you're still buying things that are outside of the things that you sell or outside of the things that you make. And those things are always taxable. So there's a lot of confusion around those rules. And I would always encourage a business to at least reach out to us and ask those questions.
So how many, if a company has to manage tax exempt certificates, what would the breaking point be? I mean, if they have 5, it's not a big deal, but if they have 30 or 40 or 50, I'm assuming it becomes more of a challenge.
Yeah, I mean, it really comes down to, again, understanding the laws around those exemption certificates, right? So again, if I'm a manufacturer and I am selling my product to a reseller and that reseller has locations, say in 7 different states, I need to collect 7 exemption certificates, one for each of those states. Not only that, but I have to track that. Some states, they expire every year. Some states, it's good just for a specific project. So it's knowing those specific state laws and making sure that you're on top of that compliance-wise. Because as Stephen mentioned, right, the states are always going to be looking to get their dollar at the end of the day. And so if an auditor comes in and you're, again, 100% manufacturing, you don't have a straight sales tax liability issue, but really the risk lies with those exemption certificates. And if you don't have a good process to manage and maintain those, that's where the auditor is going to get you.
Right.
I would also say too, you asked about volume or what's the breaking point. It depends on the business's staff, who's handling those exemption certificates, how much do they want to handle, how much can they handle. A lot of times with smaller businesses, we see that the CFO directly manages exemption certificates. And so for him, it doesn't matter if it's 5 or 500, he doesn't want to do it at all, right? And so at that point, it's better to just bring in a third party or someone to help you like Avalara to manage those certificates for you.
Right.
Yeah.
So how does, John or Steve, I'm sorry, how does the reporting of the sales tax, you folks help with that, like actually reporting it to the state, paying the state to take that liability off the client? How does that process work, like with your application?
Sure.
Okay, yeah. So, for me, I always say that that's kind of the easy part for Avalara. We have a tax engine that's integrated with our clients' accounting systems, their point of sale solutions, as well as their e-commerce sites. And so we have all of that data. We're doing the tax calculations for them. We're accounting for their exemptions for them. And so that data is already there. And so for us, when we go to remit and file for our clients, it's just a matter of pulling reports and making sure that we're validating and have the correct amounts to give to the state. So for us, that part is more simple than it is for the actual calculation.
So you're pulling the money out of their bank account and then reporting it and then paying the state on their behalf each quarter or however frequently needs to be?
Yeah, there's a number of ways that we can do it. I would say the most frequent way that we see clients doing this with us is that they give us a financial power of attorney over their bank account for that specific purpose. And at the end of the month, we have a gross amount that we're going to pull from that bank account to remit to the states that they are registered in. And so that amount will come out of the bank. And then once we give that amount to the states, we also file in all of those states as well. Okay. And so we're connected to all of the state websites that take in the return information. And so we file directly on their behalf on those state websites.
Okay. So it's got to be a huge time saver at the end of the month for clients.
Cuts days, right? If you have, again, a small accounting department in your company, this could shave off a lot of hours, right, that they're putting in every month, every quarter, that, right, they could be focusing on other projects internally. And one thing I always like to point out, with us having the power of attorney handling those returns, if the state were ever to issue a tax notice, Avalara takes care of that for the customer. They're able to track it and see what the status of it is, but we essentially deal directly with the state on their behalf and handle that for them. So again, just something that doesn't need to be plopped on their accounting department's, lap.
Right. So with regards to things going on in the industry today, states are hungry for money. So what are we seeing as far as the collection of the sales tax? I'm sure it's much more stringent than it has been in the past.
Yeah, with the Wayfair decision in 2018, that really kind of opened the floodgates when it comes to economic nexus, right? And again, remote selling. We've seen the state auditors really be, ramping up over these past couple of years. One thing we've heard too is auditors talking to each other, right? So an auditor in New Jersey might talk to an auditor in Pennsylvania and say, "Oh, I flagged this company for selling in New Jersey, and they weren't registered. They have a lot of outstanding liability." Now Pennsylvania hears that, they might look, "Oh, is that company selling in PA?" Right. So kind of opening up and expanding their kind of breadth, right, of participation, and kind of how they're kind of tracking companies to go after them for liabilities.
So, John, how about tariffs? Like, we hear a lot about tariffs. How are they, or Steve, I'm sorry, how are they getting managed? Or how can you help in managing tariffs?
Yeah, absolutely. So the landscape around tariffs, as you know, and I'm sure you've seen, is changing every week, every day sometimes. And so these rates are differing, the tariffs are changing. And so it's really hard for companies to keep track of that. We have a tool that we call Avalara Tax Research, and that research tool is backed by a lot of human hands. There's a lot of research going on with people at Avalara, and our team does a great job of doing research and validating tariffs. And so we update those rates, and we also have the assistance of AI within that tool as well. And so we have people touching this tool, we have AI touching this tool, and all of that goes to making sure we have updated rates and also updated tariffs.
So that's just a platform they subscribe to?
Correct.
Okay.
It's a web-based solution. I like to compare it to just a massive database of everything sales and use tax. And we do also, talking specifically about tariffs, we do have I think it's a weekly webinar solely based around tariffs and Avalara tax research. So something that we've seen a lot of companies, again, with that being the hot topic, over this past year, really seeing participation increase in those specific webinars, because again, that's what everyone's talking about.
Right. And it's hard to keep track of the tariffs. So
everything changes quickly, just like the sales tax rates, right? And taxability laws in those individual states, they move just as fast.
Right. So how does it work with regards to the connection with the ERP? Now, I know you have a connector for Business Central, GP, even SL, I believe. But how does it work with other ERPs? You have connectors to many ERPs, I assume.
Yeah, Avalara, we really started, when the company was first founded, it really started as a cloud-based solution. So the goal was really to try to integrate with as many different platforms as possible. So I believe as of now, we have over 2,000 pre-built connectors for various ERP systems, right? From the Microsoft ecosystem, SAP, Acumatica, as well as a number of different shopping carts, right? Like a Magento and a Shopify, as well as e-commerce marketplaces as well. So we're always really growing and expanding to, if a new product is launched that does take traction in the market, we're able to build into that. And so we're constantly building new connectors, API connectors as well.
Okay. Yeah, and the whole point of the connectors is really about ease of use and convenience to the end user. Because if we had users having to go into the Avalara solution every time they needed a rate, well, it's not really that efficient. And so Microsoft is a great example, because if you're finalizing invoices in Business Central, in finance and operations, or GP, whatever that looks like, you don't have to leave that ERP solution. So you're invoicing your customers already out of those solutions. And so our tax rates upload directly and do the calculation directly into those ERPs, instead of you having to go out to a different system. Right. And that's really the point of all of our connectors.
Right. So when looking at different industries like e-commerce, I imagine sales tax is a big deal. So I know sometimes when I go online and I order something, sometimes they collect sales tax, sometimes they don't collect sales tax, depending on where I'm located. How does it all happen? Like, I assume there's certain thresholds they need to meet to report the sales tax, and so how do you help with that process?
Yeah, so again, correct. There's what we call Nexus thresholds, right? Every state has different dollar amounts, or some states actually have transactions or amounts, right? So the amount of invoices you're processing. To make it even more complicated, a lot of states are also counting exempt sales towards that dollar threshold. So essentially, if it's $100,000, that's the mark for you to have to register in that state. If you're 100% exempt and you sell 150,000, but then you have one project that's taxable at $10, the state would say, oh, well, you need to register and pay tax on that $10. So the way we really help with that in our Avalara dashboard is I call it the heat map of the US. So essentially we have all of those transactions loaded in our system. And as a company is processing invoices with AvaTax, if they're not registered in that state, obviously we're not calculating tax, but we're tracking that. So we give them a heads up when they're approaching 80% of that threshold. And then once they cross that threshold, we really change it to a nice dark orange color, matches the Avalara colors, to really let the customer know, hey, you should really look at registering and moving forward with the state in that regard.
Right. So if a client's using Shopify or Magento as their platform, how does the connector work? Is the connector sitting in Shopify or Magento and the ERP system?
Correct.
Okay.
Yeah, that's the ideal way to do it, is to make sure that your accounting solution and your shopping cart are connected. That way there's one source of truth. There's not a lot of reconciliation going on. Everything is happening in real time. And so how that works is, Dom, you go out and buy a pair of shoes from an online site in a shopping cart, right? And so the number one thing we check is, well, is this company registered in the state that Dom's buying in, right? And if they are, we need to do a tax calculation. And so we go through a whole set of rules, make sure that the product is A, taxable, and then B, what the rate is. And then we move forward, calculate that rate. And then all the end user sees is really the tax rate that they're being charged.
Right.
And so there's not a lot of action necessarily for the end user, but there's a lot of calculation and back-end rules going on.
Yeah, just to add on to that, the importance of having our connectors plugged into, again, a shopping cart as well as the ERP system is, again, you're quoting in Shopify and orders being placed. What if that's out of stock, right? So it flows over to the ERP for finalization when the actual product, right, ships out to the customer. If that delay was maybe a month or two, the taxability rates and the taxability laws might have changed at that time. So we want to be plugged into both systems. This way we're giving accurate sales tax at the time of quoting, and then also at the time of finalization when, again, the product's getting shipped out from the warehouse.
So if we have a client and they're using Business Central and they're coming from Magento and they're moving over to Shopify, they're then getting the connector from you for Shopify, or does that connector already in Shopify? How does that?
So for Shopify specifically, you can go out and get it within their marketplace. It's really easy to install. So it's a very quick install. So the answer to your question is both. We can certainly help on the connector side, but it's very easy to go out and fetch the connector from Shopify.
Okay. So that's really just going on AppSource and downloading the connector and putting
Correct.
it in Shopify.
Yeah, and agreeing to those terms and making sure that we're all squared away on the contract. Then yeah, absolutely, it's that simple.
Okay. And BC has a really tight integration with Shopify, so kind of all works out.
Just hand it. Yeah.
Right.
So from a compliance standpoint, like what type of penalties are you looking at for an e-commerce company? Like a startup e-commerce company, sales tax, the last thing on their mind, all of a sudden they have issues with the state. What is a typical scenario like that?
I feel like the common answer we always give is it depends, right? Because every state is different.
Right.
So certain states have higher penalties percentages than others, right? So I always like to give a good example of Ohio. Ohio has a 50% penalty on outstanding liability. So if, again, say the threshold is $100,000 and I sold $500,000 worth of taxable business, but I never registered, they're going to calculate the tax that I should have owed. They're going to tack on a 50% penalty on that total, as well as interest owed on that. So again, it can balloon very fast as far as what your liability is, and really put some customers in tough decisions, right? That have to be made based on that liability out there.
Right. So what do you recommend for a startup, like for sales tax? I assume one of the first things they should really look at.
Good.
Yeah, I think, and what I would tack on to John's point is that Avalara helps in those situations as well. If you have a company that feels like there's a lot of risk or they're in trouble with a specific state, we can actually go to that state on their behalf, and we would keep the client anonymous, and we would say, look, we have someone who thinks and probably does owe you back taxes. We'd like to come to you, and really it's about making a deal with the state, right? You're saying, hey, we're not going to release their information, but we're going to get you a little bit more tax revenue if you promise to not audit them for the last 3 years. There's let's take away a look back period. We'll get you some money, and then we'll get you registered, and they'll be compliant moving forward. And more than likely that the state will agree to that because they never knew about it in the first place, right? So we're bringing them revenue to a certain degree. And so we agree to that. We get the company compliant, and then they move forward in kind. And so it usually works out that we've saved them a little bit of money in terms of an audit perspective.
So it's when the deal's closed that you actually tell them who the client is, right?
Right.
When they-
Right. So we register them in that state, right? And so they understand who it is after the fact, and they've agreed not to have a look back period of a certain amount of years.
Now, is there ever a period when the state just gives you a time and says, you know what, we're not going to hit you with any penalties if you start doing the collection, start doing it right, like a leniency period, like,
Yeah.
does that ever happen?
Again, famous answer, it depends.
Right.
Right. But I would think most states, again, if they come in and identify that there is liability, it's sometimes too late at that regard. If the auditors already are in, right, auditing the company and looking through their files. So I'd like to think that might happen more, but typically, again, if the state's already in there, they're going to kind of go with their decisions that they've made.
Yeah, and getting back to your question, Dom, about a startup, what should they do? I would encourage all businesses that are mature or starting to look at Nexus laws and to look at Nexus rules and at least know the basics of their industry and what counts towards these Nexus thresholds. And Avalara has a lot of free resources on their website, so feel free to peruse all of those. You'll get tax rates, you'll get Nexus rules. We have a lot of white papers and ebooks that can really help, and that's all free from Avalara.
Right.
Yeah, typically, sales tax in general is the elephant in the room. Nobody wants to deal with until it needs to be dealt with, right? So with like Steven said, we provide free resources to essentially help customers try to get ahead of that, and again, stay in compliance as they're growing and expanding.
Right. E-commerce, they're selling product, they're collecting tax. Professional services, whether you're an architectural firm, whether you're a managed service provider selling hardware and providing services, professional service is probably the hardest thing in my mind when to collect sales tax on, knowing as a professional service company. So give me a little bit on that. Like what are the rules at a high level?
Sure. Yeah, they're very similar to tangible products. They're just different categories, and they can get a little bit more granular on the services side. In sales tax, we always categorize products by a certain industry or by a certain type, and so tangible personal property is the broadest category, and then you get more specific. Are they medical devices? Are they is it healthcare equipment? It's the same on the service side, except it can be a little bit more specific. And so bookkeeping services is a perfect example. It's generally exempt in a lot of states. I know it's exempt in New York and New Jersey. But if you look at something like a carpet cleaning service, that's only exempt in New York, but it's taxable in New Jersey. And so every state has their own set of rules on every single one of those service categories. And those service categories are really granular, and there's a lot of them. And so you have to really understand what services you're providing, which is really difficult not only for professional services businesses, but people like construction or manufacturers that install their own product. There's a lot of different ways to cut the pie with services, and it gets really complicated.
Yeah, and we've been seeing too, a lot of the states when it comes to taxability laws around professional services seems to be where they're changing things the most recently, as far as taking things that were previously not taxable and making them taxable. Again, right, the state's always going to be adjusting and trying to figure out where they can collect more. So if they see an industry growing that's been exempt, right, good chance they might take another look at that product or service and say, hey, we need to start collecting some sales tax on it.
So if I'm a company and I buy 20 laptops and I have a provider come in to set those laptops up, I'm paying sales tax on the laptop, then I'm paying sales tax on the service that person's putting into setting up those laptops, depending on the state?
Potentially, right?
Okay.
Potentially.
Okay. So with professional service companies, at what point do they realize they need to start doing something? I assume when they get a penalty, I assume, right?
Typically that, right, they might get a notification from the state, or sometimes specific customers, right, would alert them if the customer realizes that, oh, I should be paying sales tax on this, why haven't you charged me? Sometimes that would alert the company, like, oh, we need to take another look at this. And again, it all goes back to how much bandwidth does your accounting department have to be researching these changes, these laws, these rates on a monthly basis, essentially. And if they don't have that bandwidth, then good chance, right, something's going to fall in the cracks.
So you could take what a company should be collecting as sales tax and put it in a system and then tell the customer what their liability is. Like, in other words, I don't know what I'm supposed to be doing. You understand my business. You go in, you do a fancy magic trick, and then it comes out and you go, well, you need to collect tax on this, and this.
Right. So the way, really, the setup of Avalara, one of the more important aspects is mapping our Avalara tax codes to how you have your product and service code set up in BC, right, or in Shopify. And we have thousands of different tax code categories. And essentially, once that fits, we know all of the taxability rules and rates around that tax code across all the states. So once you assign everything and we get everything linked up and mapped correctly, it's one and done, unless obviously you add a new product or service that wouldn't fall in that initial category. But once that's done, we know exactly how to tax it, what the rates are, depending on, again, where it's being shipped from and who it's being shipped to.
Okay. Now, what type, from the server side, your service to the client, I assume there's updates, obviously, all the time to Avalara's, with tax rate changing all the time. How does that work? I mean, is there a plan they would have with Avalara? Some type of, with the subscription, is there certain levels of plans they can have, or how does that?
That's all included and updated automatically as soon as those changes are made. So part of the Avalara tax research benefit is Steve and I get emails every morning, and it'll tell us there's been 14 changes in this state or 10 changes to this specific product, and that can happen daily. So we get those notifications, but in the actual Avalara connection right into BC, that happens automatically. Yeah. So it's always up-to-date information, always up-to-date rates that you're getting.
Okay.
And also an interesting thing about our Microsoft world is that our Avalara connector actually keeps up with the Microsoft update schedule. And I'm sure you've seen this with your clients, that they do a lot of updates.
Oh, yeah.
And so we always keep up with that schedule. I would say we're probably one of the few providers that actually keeps up with that Microsoft schedule.
Right. Because again, if that connector goes down, right, you're not able to get invoices out, and that's the last thing any company needs. So we pride ourselves on always having those connectors live and available.
Right. So what's like with manufacturing companies and wholesale distributors? They don't have a need for sales tax collection, but they have a need for managing tax exempt certificates.
Right.
Now the other thing is use tax. I hear a lot of clients talking about use tax, and a lot of people don't even know what it is. So explain use tax and how maybe you could help with that as well.
Yeah, absolutely. And we've invested heavily into our use tax and accounts payable solution, and I'm happy to talk about that. I think the biggest issue that people are running into now is that use tax and accounts payable, it's really up to the company themselves to self-accrue that. And so whereas sales tax, you can look up a rate and kind of pass that on to the customer, right, and collect that tax. Use tax is a little bit different because somebody in the accounting department is having to look over all the purchases and decide, do we need to pay use tax on this? Did we get charged tax on this already? Where do we start charging ourselves and self-assessing that tax? And so that's the difficult part about use tax. And for manufacturers specifically, I think for a long time, they felt like they didn't need to do anything with use tax because we create a product, everything we buy is raw materials to create that product. We have a manufacturer's exemption, so we don't need to pay tax. Well, that's not the only thing a company buys, right? A company is buying equipment to create their product. They're buying office supplies for their employees. There's a lot of purchases that happen that probably need to be looked at from a self-accruing standpoint for use tax. So that's where we come in and help with that.
Right. So essentially, if you're again purchasing products from a company and that company's not utilizing Avalara, it's also a great way to really make sure, was I charged tax correctly and was it the correct rate?
Right. Yeah, perfect example on use tax is manufacturers that have a lot of purchases for their machinery to build their product. That's not exempt. That's still taxable to them in a lot of states. Some states will say that it's exempt, but a lot of states will actually charge use tax on that. And so what ends up happening is they don't accrue for that. An auditor comes in and says, you bought $1 million worth of parts and maintenance on these machines that you guys use. That's all taxable, and you guys owe us use tax on that. So that's really where the financial risk is on the use tax side.
Okay. Yeah. So the other thing, and I might throw you a curveball on this one, but with subcontractors, I know they need to collect a lot of data and information. Mm-hmm. How do you folks help with that? I think you have a platform for that as well, for subcontractor management of different licensing and things like that.
Mm-hmm. Yeah, our business license tool, it's a great way to, one, track, again, fleet car registrations, right, or individual licenses for a specific employee. Our customers can kind of maintain that themselves, but then we also offer a solution where it completely outsources that. So essentially, our internal Avalara team would be able to track all those licenses, file all the renewals for them. And this goes hand in hand with business licenses as well in local jurisdictions to essentially really automate that whole side of the compliance house for them too.
Okay.
The other piece of that too, with subcontractors is if you're passing on work, there's different tax implications as well. And we've seen that, especially in construction, that situation can vary wildly from subcontractor to subcontractor. And some contractors just charge all of their subs, or their subs charge all of them sales tax. But the situation can be wildly different from sub to sub.
Right. Yeah. Some contractors are always difficult, even on payroll. They're union, they're not union.
Right.
They don't know what's up and what's down. So, and I apologize if I ask this, like managing the certificates, let's assume you're out of compliance. Is there typically a financial penalty for that, or a slap on the wrist?
Yeah, I mean, it can be, again, every state's different, but it could be $5,000-$10,000 per certificate. Sometimes the auditors will give you a grace period to try to go and collect those certificates. Sometimes they don't, and you're on the hook for that. One of the biggest kind of management issues we see with certificates a lot of time isn't the fact that there's not one person in charge of maintaining them, but that it's all of them are kept in a filing cabinet somewhere, right? And the last thing you want to do to an auditor is if they walk in and they say, I need this certificate for this customer for this date range, you can't easily pull that. So you might give them more than what they asked for, which is never something you want to do.
Yeah.
So with our solution, you're able to quickly search and pull that one specific digital certificate and send that to the auditor. So again, it's not just the actual collection, but it's the organization of them. And again, making sure they're valid and up to date.
Right.
I think a conservative way of looking at that too is if an auditor comes in and you can't prove that you had the exemption certificate at the time of sale, well, that's the same situation as saying that you should have charged sales tax and you didn't, right? And so that's always a conservative approach I take, and there's a lot of audit risk there when you don't have that proof.
Because a lot of people don't take the exemption certificate management very seriously. They just, it's like it's not important. The sales tax may be a little more, but there's money involved.
Right.
But with the tax exemption, like whatever.
Well, they don't until they get audited and they have penalties, and then it becomes serious.
Right.
And that's the situation that we see a lot of the time is that after the fact of an audit, they come to us and say, we just got dinged here on the audit, and we've got some penalties, and so we need to get this process a little bit better.
Now, do you see that happening more in one state over another state with the managing of the exemptions? Like some states are, from your experience, a little more strict than other states, or?
I'm not necessarily on the audit side, but I would say like a state like Florida, right? Florida exemption certificates expire every year, right? So that's something that always has to be recollected year after year. And so it just makes it a little bit more complex, right, for a customer to manage.
No.
But I would say a lot of things we typically see too with mergers and acquisitions, right? A lot of times if the prior ownership they weren't tracking their Nexus thresholds again, or collecting certificates, depending on the type of merger, the new owners could be on the hook for that past liability, even though they weren't owning the company. So we see a lot of problems come to us on that end when companies either merged or they're acquiring new companies and didn't really take the time to dive into, well, how compliant was this company, right, when it comes to sales tax ahead of time.
So let's talk about AI a little bit. What are you seeing in the space? I mean, everyone's talking about AI. What are you folks doing?
It's the hot topic, right? It's all about AI. Avalara actually just launched a press release yesterday for a new agent that we are going to be promoting here over the next couple months, and we've seen a brief demo on it. It looks phenomenal. Again, it's everything that you want in those AI agents as far as convenience, being able to plug in right to multiple platforms and give you some real-time results when it comes to taxability laws and tax rates. So more to come on that, and I'm sure you'll start seeing some videos through LinkedIn and commercials that we're going to be promoting.
Sure.
Yeah, I think I don't know if this is AI week, but we've announced a little bit more AI involvement within our company. But I've seen a lot of activity on AI this week, and so for us, Avalara was the first to the cloud. We were cloud native when we first started, And I think AI is going to be the same thing. I think we're going to be one of those companies that are far and above our competition on the AI piece. And so Microsoft specifically, I think there's a lot of exciting things. Microsoft is investing heavily into Copilot. And I know that Avalara is going to be able to interface directly with Microsoft Copilot. And so there's a lot going on. I think AI is a big, broad term, but specifically for Avalara, we're really going to make sure we corner that market with sales and use tax.
Interesting. So, as far as the getting in contact with Avalara or speaking with folks from Avalara, how should a client speak to their partner who's managing their ERP? Could they reach out directly? What's the best approach there?
Any and all ways, right? But obviously, reaching out through the partner, we typically that works out best for us, right? A lot of times our partners know our customers better than we ever will. It's able to help us kind of scope out their project a little bit more efficiently and faster. And then certain partners are also certified in our implementation. So that partner can actually implement Avalara into the BC environment for that customer. And again, since they already know that customer's customizations within BC, they're able to get it done a lot faster. So we've seen a lot of great success having these partner-led implementations, just with happy customers at the end, right? Getting started sooner than they anticipated and being able to get that real-time sales tax calculation on their invoices.
So the partner could take on the entire implementation?
Of Avalara, they could. Yeah.
Okay.
Yeah, if they're certified with Avalara, absolutely.
Yes. Okay. And if they're not, how much involvement would a partner typically have with the implementation of Avalara? Like, I assume most of the load be on Avalara compared to the partner.
Yeah, we have different implementation in-house routes, right, for certain customers, depending on their need, right? Some are strictly go live. So a smaller customer that has the time to implement, they can do that on their own. We do have a great implementation pathway where Avalara does roughly 90% of the lifting. So again, if you have a customer who needs us, but they're also going through a massive ERP upgrade, bandwidth typically is tight internally. So we're able to really, again, do the tax code mapping for them, get their whole profile set up, their Nexus heat map, right? Turn on all the states that they're registered in, really take that lift off of their plate to, again, get them up running faster and making sure when they're live on BC, they're also live on Avalara.
So if a customer wants to get, a price of what this would cost, what information do you need from them in order, let's say they have a sales tax requirement and reporting to the state. What information you need from them to come back with an estimate of what the annual cost would be?
Yeah, we always like to have that conversation just on the size of their business and how many transactions and invoices they're seeing on an annual basis. That's really kind of the base of how we do things from a pricing perspective. But I will say it all depends. It really depends on their situation as a business. It depends on what connectors that they're going to need. It depends on how many states they're registered in, right? And so there's a lot of different factors, but all of those business factors contribute to how we price things.
Right. Yeah. The way our pricing works too is we're set there for companies that come to us that are small, but they're growing, right? And so we tailor the packages to their needs at that time. But just because of the different products and services we offer, we're there as they grow and as they expand as well.
Okay. So are they filling out a questionnaire of some sort when they're onboarding, or it's more of an interview?
It's more of a conversation between someone like John and myself and the customer. Yeah.
Okay.
Because again, sometimes we have 3 core products: Avatax, the Exemption Certificate Management Solution, and Returns. Right. Sometimes they're only ready for 2 out of the 3 initially, right, or 1 out of the 3. Right. So it's just figuring out what they need at that time and then putting together a project really that's just tailored to them.
So do you provide some type of a support line if they have a question or an issue? I assume you have an 800 line or email.
Correct. Yeah, we have varying levels of support, but yes, so the short answer would be yes. They'll always have support no matter what. We do it in a few different ways. We have AI chatbot that can help them. We have cases, they can submit cases through their portal, and then of course we'll have a phone line as well as email.
Okay. We do have a dedicated partner support division as well. So again, if a customer was referred to us by a partner, we're able to get that escalated for that partner a little bit faster than if the customer is just to call in. So again, just really trying to reinforce those relationships between customer, ERP partner, and Avalara.
Right. So does the customer typically first go to the ERP partner before they?
Typically, if they were referred that way, that's typically the route. And again, it just keeps the communication lines open with us, and that way we're both able to help that customer.
And I think just something like someone like Admiral, you guys have a good relationship with your customers, and so you're probably meeting with them on a more frequent basis. So you'll probably hear about those issues before Avalara does, right? Hey, we're having a little bit of a glitch in the Avalara solution. Can you help us open a case, or can you reach out to your contact there? And so you'll hear about that before they interface with us. And so we really rely on our partners for that aspect as well.
Okay. So I just want to get back to, I beating a dead horse with the tax exempt, but what type of companies, besides manufacturing distributors, wholesale distributors, what other type of businesses would require the management of exemption certificates?
I would say companies that are heavy into selling into distributors and resellers, right? Because they're having to manage those reseller certificates from a customer facing standpoint. And so if you're selling a product to somebody who's then going to resell it, well, they need to give you a reseller certificate. And so if you have hundreds or thousands of those, then it becomes difficult to manage. So I would say if you have heavy distribution as your customer base, then that's a pretty good indicator that you would need some certificate management.
Okay. Well, I think I've asked all the questions I may have. If you want to add anything I might have missed, John or Steve.
I don't know. We covered a lot today. Sales tax, again, it's a complex environment. I mean, we could be here probably for 3 to 4 hours talking specifically about that.
Yeah.
But I know we covered a lot. I mean, we went over a lot, and
yeah, I think you asked a broader question earlier, Dom, and it was really what do people struggle with? I think the two main points is, number one, where do they need to register and how are those rules affecting them? And number two is, what are my products and how are they taxed? I think that's really the two main stumbling blocks that a lot of these companies have, and Avalara helps both of those issues.
So that's great. Well, Steve, John, I appreciate your time today, and we'll talk soon.
Thanks.
yeah, thanks, Tom.
Yeah, thanks. Appreciate it.
I want to thank John and Steve from Avalara for joining me today and sharing their perspective on tax compliance and how Avalara can help your business. For more information, you can go to www.admiral-usa.com.